Hi, this is Sam Lee, President and CEO of NorthIsle Copper and Gold. We have a very large 35-kilometer district, copper gold porphyry district in British Columbia that currently boasts about 7 million ounces of gold and indicated, about 3.5 billion pounds of copper and indicated. We're continuing to drill and expand this very prospective land package, focusing on higher margin areas to the north and deep buried porphyries to the south, all within our contiguous 35-kilometer claim.
Sam, good to see you again. I'm calling you from LA. There may be the occasional airplane above. So apologies for the noise for people listening in. Right, Sam, it's been a while since we spoke. I think we had a good solid conversation around the business plan back then. A few things have happened since. Obviously, recent announcement with regards to the resource size. As you say, it's big now, but how do companies like you move projects with big, resources like this through the phases? Because people are going to need to believe that you can finance this thing.
Absolutely. So that part hasn't changed, Matt. So we set out about a year and a half ago to solve that very problem. How do you take something that inevitably will be a very strong cash flowing asset, but needs to be built, needs to be funded, can't be encumbered too much given its size and lower grade? How do you then solve that problem? Well, we have to do it through the drill bit, through exploration. And as I mentioned in the opening remarks, across our 35-kilometer district, we have so many multiple targets that focus on higher grade areas, potentially. We'll focus on deep buried porphyries. And so we chose to focus on the higher grade, higher margin, gold-rich area in the northern part of our zone. And so within the last year and a half, we've discovered Northwest Expo, West Goodspeed. This is all in the northern corridor that just couples Red Dog, which informed our 2021 PEA. And now we've produced a resource at Northwest Expo with associated metallurgy, which is going to inform the first phase of our new PEA coming out in Q1, early Q1 of next year, that will reduce capital intensity and bridge to a much larger project, that cash flowing project for multi-generations, multi-decades. And so we're about 80% of the way done, and a lot of the execution has already been issued. And as you mentioned, just a couple of weeks ago, we announced our global resource that contemplates all three projects put together that will inform our PEA, and that's where the 7 million ounces of indicated comes from, and the 3.5 billion tons of inferred. It's about over 1.1 billion tons of overall resources. So this is a big project, but if you look closer into the resource estimate, we've broken it down into NSR value per ton metrics. So that is, how much is this rock actually worth post recoveries? And as you'll see, the two projects, Northwest Expo and Red Dog, that inform the first phase of the project, host on average about $45 per ton rock, also with a cost of $11.50, which is our cutoff NSR value. Again, we're able to do this because our engineering is about 75, 80% complete. That's about a 75% margin right up front. So that's what we're going to utilize to address your question around capital intensity, lowering the capital intensity, increasing the returns, focusing on the gold-rich zone in the project. That's all through really, really good exploration.
Okay, so I love the fact this kind of evolving Canadian mindset when it comes to how these projects need to get built out. It used to be a case of like, drill to the edge of the envelope, let's make it as big as we possibly can, and then flip it, give it to make it someone else's problem. Here you're talking about this bridging, and I know you've just sort of explained some of it, but can we get into the detail as to what it actually does for a company of your size? We're sitting here at 120 million market cap. It's still a fairly kind of tight market when it comes to raising capital out there. So this bridging thing, how does it work? What does it do for you?
Sure. I think the clearest example of what this bridging phased approach does is Artemis Blackwater, right? So this is another big gold system in British Columbia that initially, before 2020, contemplated a very similar size project that our original PEA suggested. So it's 70,000 tons per day. It would have been at the time over $1.5 billion, close to $2 billion capex. And it was an orphan, just like we were, for a significant period of time, until Steve Dean and a group of individuals came in, contemplated this phased approach starting at 20,000 tons per day, reducing the capital by over half. So their overall capital was about $650 million as part of phase one, and then bridging that into two more phases until you get to the 70,000 tons per day, and you would phase that obviously, and each phase would support and fund the next phase. So what's happened 4 years later, it's been a remarkable success in British Columbia and quite frankly for our industry. Again, another proud Canadian company. Well, that company has gone from a couple $100 million to $3.5 billion today, because they are now about to produce their first ounce of gold. And so that's what a phased approach does. And you can only do that, again, through good exploration, through higher margin rock, which obviously Blackwater is. And that's the same approach that we took. We identified that we needed a little bit more tonnage around higher NSR value per ton rock, which is why we went out and went after Northwest Expo. We've now defined about 40 million tons, 45 million tons of about $55 per ton NSR value per ton rock, and another 37 million tons of about $45 per ton rock. So that's the example of how these phased approach can work. What we're contemplating specifically is starting. We've hired Ausenco about 5 months ago, to assess what that optimal initial throughput or CapEx would be. And we obviously found the range of about 20 to 40,000 tons per day. The interesting thing about today's environment, and we're seeing Artemis trying to accelerate it, is because we're seeing gold at all-time high prices. And if you have a gold-rich phase one, which we do, you don't want to minimize a project to the extent where you're producing less product when your gold prices are very strong. And so what you're seeing Artemis doing is they're trying to accelerate their phase two to make this 40,000 tons per day as quickly as possible. So as we contemplate our project, what we're trying to obviously do is minimize the CapEx, but we're also trying to maximize the NPV to ensure, because this is a higher margin, higher gold component zone, we want to maximize the current and future gold price environment. So right now we're contemplating between 20 to 40,000 tons per day as our phase one, and we're leaning very heavily towards 40,000 tons per day.
Okay, so the kind of hedging there, so you've asked Ausenco very specifically to kind of get after the Northwest Expo deposit, the kind of fallback, and it's very tempting in like you say, in a high price gold environment like this, to maybe be a little bit expansive, but there's no guarantees and certainty. You'll be putting out the PEA, in your early Q1. There's no certainty around, gold price staying where it is. We'd all love it to, we expect it to, but there's no guarantee to that. So with regards to this slightly more ambitious, larger volume side of things, what is Ausenco's, how far does Ausenco's remit go in terms of optimizing that NPV?
Well, very, very thorough, and quite frankly, it's continuing. The discussion continues on to today. So initially, we said we're going to go out with 20,000 tons per day, which obviously minimizes capital intensity. And I can tell you, right, a project in British Columbia has been built for about $650 million Canadian for 20,000 tons per day. That's kind of our proxy. Ausenco, what, by the way, was the project engineers for Blackwater as well. But if you go expand to a billion, 40,000 tons per day, does that get you up to in and around a billion Canadian, 700 US? Most likely. Is that too big of a ticket versus a $2 billion project, or God forbid, $5 billion CapEx projects with some of these other? I don't think so. I think that we are, again, it's a function of where we are also in the market. And I do think that, yes, gold prices may go down, but currently we're in a situation where I do think that we're in that fourth, fifth inning, as I keep on talking about, of the cycle. And if you do believe you're in that sort of fourth, fifth inning of a potential super cycle, then you have to allocate your capital accordingly in anticipation of that as well. I don't think there's very many people, if any, that think that copper is not a good long-term proposition, right? This is obviously has been for the last 4 or 5 years has been an environment where everyone believes in the long-term proposition, but people are have less conviction as to how long it'll take to get there, right? But we're already there in gold, right? Gold is this is the narrative, the colliding of all these things that should strengthen gold prices has finally happened, right? So gold does usually lead copper. This is an environment where I do think that we keep on referring to bridges. Gold does bridge copper, and this is exactly the reason why our project, our opportunity is one of the most compelling opportunities in the market right now, because you will be hard pressed to find a developable copper project with this amount of gold in it, right? If you look at all of our peers, it's the gold is de minimis and or sometimes non-existent. And as I keep on emphasizing on your show, gold is the most critical currency out there, right? You could fund big projects with very, very low cost of capital because gold acts like a currency, not a commodity, right? And so at the right time, for example, if you want to sell a portion of gold, which at this point is about 44% of our overall resources, you can do so at the right time at a very, very low cost of capital, 0 to 4% when you're at project sanctioning decision, right? So again, gold is such an important part of our equation, and the reason why it's enabled us to not only go through this phased approach, but to look at things a little bit more confidently, aggressively, with a lower cost of capital potentially.
Okay, and let's look at that. How you kind of move through those phases, because I think you're setting up for a nice starter project, obviously with Northwest and Red Dog. We've talked in the past about Goodspeed. We made an announcement about extensions at Goodspeed to try and kind of create something which will positively affect the economics there. So again, can you sort of describe what that could look like if you can sort of join those projects up?
Sure. So that's exactly right. Like when we focus across this 35-kilometer district of ours, we have to be very pointed in where we spend or allocate capital, right? And so our first priority is always focusing on areas that are accretive to our NSR at Pushamu and Red Dog. So that's effectively $35. If we see the opportunity of finding more rock that is greater than $35 NSR value per ton, we will focus at that as our primary opportunity. And that's why we focused on Northwest Expo. Obviously turned out to be $55 per ton. And that's why we're focusing on West Goodspeed, which isn't a resource yet. We just discovered it in December and we've now released 15 holes around West Goodspeed. We've elongated the strike of West Goodspeed, so now it's 1 kilometer long after today's release. And the really important aspect here is that it's now only about 200 meters away from Red Dog. So we haven't released hole 16 yet because we just finished drilling it off of the success of our drilling program this year. So we did one last hole before the season ends, and that was 16. And that's only about 150 to 200 meters away from Red Dog. The significance of that economically, obviously, that could be vended into that phase one area, but also geologically, the idea of this being a much bigger system, connected system than just separate zones that are separated by 1 to 2 kilometers is hugely impactful from a geological perspective. So we have something that we now see is much larger than what we originally anticipated between Red Dog and West Goodspeed. And we also now believe that Red Dog, which is a broken off breccia that occurs at surface, no strip ratio, very little strip ratio, it's broken off from somewhere. We now believe that that is from that West Goodspeed area. And all of this happens at surface. We know that Red Dog is around $35 per ton rock today, and we're seeing grades of between 0.5 to 0.6% copper equivalent at West Goodspeed over widths of 200 meters throughout the last 9 months, right? So all of this hangs together around focusing our first priority around exploration in this zone.
Right. Okay. So if you start to make that sort of hang together or show that it hang together, it's going to attract either money or entry partners with a balance sheet to kind of maybe help you with that should you want it. So you're painting a picture there. But as you indicate, this is a much bigger district play, which either you guys decide to do over a longer period of time, or you show someone else how they can get after this thing too, because we haven't talked about Pemberton yet. Obviously, that's just the beginning stages of something interesting. How do you manage all of these moving parts as a small company?
Yeah, that's an excellent question. And so, yes, all this generative exploration around West Goodspeed has captured the imagination of a lot of investors because, right now it's a kilometer strike. Northwest Expo was only a 600-meter strike, and we've already shown our success around Northwest Expo. And then again, this connective nature between Red Dog and West Goodspeed could be the game changer. But to your point around the district, the 35-kilometer district, we do have Pemberton Hills, which we've talked about in the past, being a buried porphyry system, something that has immense reach around its lithocap, 6.5-kilometer by 1.5-kilometer lithocap. We've done a number of holes with our ex-partners, Freeport and ourselves. We've defined a drill-ready area to go after this porphyry. We've had good proof of concept success through our last program, which was late last year. That's defining the system as being a tilted system towards the southwest, and something that we believe brings up that stem of the porphyry, that mushroom, that potassic zone closer to the surface. So that's there. And the analog, I think, that you've just referred to is how do you then make this the district play, right? Well, the most recent one that I can think of is what's happening with Filo, Jose Maria, and potentially Los Lados at NGX. Recall in 2015-16, this was all one company, right? This was all part of under NGX, Filo, Los Lados, Jose Maria. They then separated the three companies. This is pretty much one district, right? They separated the three companies because they were separable. One was a very deep buried porphyry potential. The other one was an open pit developed within the next few years and effectively bridged to the deep buried porphyry potential. And so what BHP did in their most recent acquisition of Filo is that's what they bought into. They bought into the district play of effectively that OT model. Mine something for the first 20, 30, 40 years, open pit, and then go underground. Underground being, of course, the Filo opportunity. So from our perspective, we've got that district. We've got the toehold on that district across that. It's a 50-kilometer district, but we own 35 kilometers of that continuous trend. And we're obviously focusing our capital and our efforts on the northern part of it, where we're seeing at surface higher margin, like already discovered areas now. We continue to discover that area. But I think the real question mark and opportunity can be Pemberton Hills. How do we do that in a way that doesn't kill us and blow our balance sheets and make us just a one trick pony and you're either a winner or a loser, a binary outcome? Well, you do it through partnerships. So we are certainly undergoing discussions right now to figure out who the best partners are, who are the most aligned partners that see our value add in the open pit area that we would retain 100% of, but would be immensely triggered by this underground potential at Pemberton Hills.
Right. Okay. And you've started conversations like that
Correct.
already, have you? Or is there more work to be done before you happen? Right. Okay. Can you tell us more on that one? What's your expectation? I mean, how do you kind of set this up for your current shareholders? How do you set this up so people? Because what I see is that there's a lot of these kind of $100 to $150 million market cap companies on the TSXV, and they kind of seem stuck. They're stuck because of what's gone on for the last 4 or 5 years in terms of the equity market. That despite M&A and JVs and mergers of equals happening, that money's not going to cascade down through the sector anytime soon. So one, you explain a business plan, but where's the kind of money come from to kind of release the potential here? And if it does come in at these sorts of valuations, it's probably nowhere where you think it should be. Do you know what I mean? So you've got to kind of jiggle the pieces around on the board a bit just to kind of get noticed, and two, get anywhere close to the valuations that you're seeing? Because I think we've looked at some deals that have been happening recently, you're seeing 20%, 30% premiums. 20%, 30% on where you guys are now probably won't make your day, will it?
Yeah, I think that it's important not to potentially conflate project ownership versus public ownership. Right now, we obviously are focused and capable of advancing our near term at surface proposition that we've just described, that's going to be defined by the PEA coming out in Q1 of 2025. But with Pemberton Hills, that is that bigger opportunity where we do need to understand how that significant exploration program is going to get advanced financially. And so at this point in time, we are looking at project partnership, which, as you can imagine, has attracted some of the largest companies in the world. Obviously, there may be an opportunity in the future for equity participation, but right now, the way that we see best unlocking value for the entire district is two parts. One is our open pit near surface opportunity, and the second is to go down and try to find that buried porphyry at Pemberton Hills.
Okay, so but if I'm looking at Pemberton Hills, what's going to attract them? What's going to draw them in? Obviously, gold's gone on around 2,700 bucks, fantastic. Copper is sort of creeping up through the phases, 440, that sort of level. Is it just going to be a commodity momentum play, or what will a decent partner? Because you got to select the right partner, right type of partner here. What are they looking for?
Those are two completely different questions. So I think the answer to the first question is, how do we show progress on the project? It's not just a commodity play. As I said, this is a massive system, 6.5 kilometer, 1.5 kilometer lithocap. Lithocaps don't exist in British Columbia. They've been all eroded out. Some of the most prolific regions in the world, Chile, Peru, Indonesia, they all have these established lithocaps. So there's no doubt that in itself is a very attractive target for exploration. We've then progressed over the last 4 years around drilling in not only the lithocap area, but also in this tilted potential potassic zone where we are seeing the alteration, the peripheral alteration. We reported earlier this year that we're actually into that peripheral alteration, the QSP, quartz-sericite pyrite. So these are all inching our way forward around proof of concept. And we believe that we're at a position now where we do have a very defined drill pattern target for discovery. And so what I think major companies, any company really, that progresses exploration, they're looking for these stepwise functions to obviously get towards proof of concept that establishes a major drill program, right? They're also looking for failures. Like, what have you learned from some of the failures that you've progressed? And so one of the failures we went after in 2021 is we went 3 holes over 1,000 meters, and we didn't even get through the lithocap in 2021 rather. I don't know if you remember that. That was when we first had met. And the good news is that the system is much bigger than expected. The bad news is we didn't get the orientation correct, right? And so what we've learned from that, we've taken the data, we've run it through think tanks like Codes and Amira, and even have gone back to our old joint venture partners, Freeport, and asked for input around orientation. And so now we've come up with this new hypothesis that this system is indeed tilted. Interesting enough, it's tilted in the same direction as the BHP Island copper mine, as Hushamu, as Northwest Expo. So it's all tilting in the same direction. And after establishing an IP and mag, coincident IP and mag program last year, we drilled 2 holes. And towards the northeast, we intersected that peripheral alteration outside of the lithocap, right? So this is really not for a geologist, it's a huge thing. The fact that this is inching beyond the lithocap into that altered zone that's peripheral to the potassic zone, that is success from a geological individual's perspective. And so we've done that. The second part of your question is a little bit more challenging, which is, how do you align yourself up with the right partner? How do you not become just an exploration arm for a company that has 20 of these other investments around the world, or 30 or 40 of these other investments around the world. So they've already diversified their portfolio, right? How do you make sure that that tail doesn't wag the overall corporate dog? Well, that's a very, very, very difficult question to answer, and we haven't clearly come to the conclusion yet. Otherwise, we would have announced something. But I think that is what's driving our decision making more so than progressing the project from a technical perspective from their perspective, because I think we've done a great job of progressing the project. I think from our perspective, it's making sure we don't become a one-dimensional, myopic company that's beholden to extremely risk-tolerant behavior.
Well, there's the other side of that coin as well, where we see people make mistakes, and I think maybe what you're chasing sort of drives the fact you're talking about larger companies with bigger balance sheets and not going on to another management team who have got no money, have to raise the money to kind of go through a process. You don't have to deal with that, because that's got its own set of challenges, or huge challenges. So the big guys, as you say, they've got lots of options, and they've got lots of irons in the fire, as it were. But that then kind of reduces the availability of options for you. There's not so many companies that perhaps will meet your criteria. So are you in any rush to do this? Do you think that you can move Pemberton along at the pace to suit you, or are you under pressure to kind of move it a bit quicker?
So that's a great question, right? Because clearly when we're negotiating with other people, it's not a very big group of people, as you can imagine, right? And so our biggest advantage in this is the fact that we have 1,000,000,001 tons somewhere else that we are continuing to advance, that the market is giving support to us. Like, just you think about the growth since we first met, right? Matt, like 4 years ago around this name, like we have been a 3 to 4x since that period of time. And I think that that's really indicative of the support that we're generating in the market, support that not only around our strategy, but the support around the execution of our strategy, right? So our focus is for our shareholders, and our shareholders are telling us right now, for the most part, there are obviously shareholders that really want us to go after Pemberton Hills ourselves without not even diluting ourselves. But for the most part, they're saying this thoughtful, methodical approach around unlocking value in the district is the right approach. If you think about it, if we do have success at Pemberton Hills, that's a game changer for what we currently have, because it's all part of the same district. And what we currently have is that, starter 20, 30, 40-year project a la Los Helados, right? So it is, there's a lot of debate, certainly at the boardroom table, and certainly a lot of debate at the within our large shareholders as what we should do. But we need to always make sure that what we're doing is the right thing for our shareholders as a whole. And I think this is the right approach.
Okay, and one final thing, Sam. And you've explained the business model beautifully today, but you're just rushing up towards delivery of a PEA early Q1 next year. There's expectation that you're going to need to be drilling smart to kind of inform the further economic studies, etc. So with are you kind of done on Red Dog and Northwest, and it's a case of focusing on Goodspeed and maybe a little bit more development on Pemberton? I mean, how do you see the kind of drilling, i.e. the expensive bit of the growth story panning out in the next sort of 12, 24 months?
Thanks, Matt. That's a great question. Great one to finish off with. I think the key here to understand is we're nowhere near figuring out what we have at West Goodspeed starting off, and then Red Dog being connected. And then, of course, at Northwest Expo, we are actually coming out with another batch, our final batch of Northwest Expo results in the next month. And so recall, this is an area of high-grade zones. Obviously, we had that 130 meter of 2.1 grams per ton at surface, which encapsulated hydrothermal breccia of about 5 grams per ton, about 2% copper, 3 grams per ton gold within that interval. So causative intrusion is part of the focus around this drilling that's going to come out in the next month and a half, right? That is going to inform a very strong program for 2025. But again, these are all connected by about 1 kilometer's distance, right? And as I keep on sort of emphasizing, it's not proven yet. But if we could convert, that's a 7 kilometer trend between Northwest Expo, Red Dog, and West Goodspeed, right? If we can be successful in connecting the dots and converting that to a 7 kilometer strike, well, that becomes tier one world class. And I can tell you right now, there isn't an asset existing right now in the world that is world class tier one that isn't already owned by a major. Okay, so a lot of people may purport that they have tier one world class projects, and we're hoping to be one of those people. But if we can convert this trend into a strike, that becomes 100% bona fide world class. And so we've got a lot of targets, not only in between Red Dog, Northwest Expo, Red Dog and West Goodspeed, but we're going to come out with one target that we actually drilled out. That's going to be between Red Dog and Northwest Expo. We've got MAG that shows a very, very significant strength signature just towards the north of Red Dog, which is coincident with our structural work that is showing some sort of offsetting in these projects and deposits. So there is right now West Goodspeed, as we indicated in today's press release, it's already 1 kilometer long, and it's open in both directions, northwest and southeast. And so our priority, we see the higher grades happening towards the northwest, which is towards Red Dog, which is towards Northwest Expo. That's going to be a huge focus of ours in 2025. The purpose of releasing this PEA, right? It's not to say this is the project we're charging head. We're just going to be doing engineering for the next 4 years and potentially being orphaned. That is not the objective. The objective of the PEA is to show people explicitly the economics of the area, the fact that we have second to none infrastructure, hundreds of millions of dollars have already been spent by the BC and the federal governments to build roads, power, infrastructure, ports, towns. All that gets encapsulated in your costs, and you'll see those costs get reflected into margins. And that's what the purpose of the PEA is to show people that virtue of the project.
Right, and okay, I guess this also leads on to sort of dual track thing, because yes, you indicate no one wants to be kind of orphaned in a sort of engineering, the boring phase, as I think the market reflects of this, but continue doing very specific types of drilling, because it's like I say, it's already a big project, so it's a very specific type of drilling in parallel with the economic study phase, so the growth story doesn't stop. Is that at the back of your mind?
It's 100%. So as I mentioned before, the priorities around exploration drilling is we have to see areas that are above $30 to $35 per ton NSR value per ton rock. That is our marker, right? And because anything above that is going to be accretive from an economic perspective in that northern region, that's going to inform our phase one and potentially be a standalone project, right? If we grow that tonnage beyond, it's approximately 120 million tons today, right, of that NSR dollar per value. If we grow that tonnage to 200 to 300 million tons, that might not be the phase one. That might be the project, right? And so that is something that we have placed as first priority. Pemberton Hills is a priority, but we understand that is much earlier stage. It's for discovery right now. It's ripe for discovery, and it's going to be expensive because it's a buried system, right? So this is how we allocate capital. We make sure that we're adding value accretively to margins. We always think about this project as margins, because I think the first thing people, when you layer this, our announcements or our projects, you look at the headline and say, wow, that's huge. 7 million ounces of indicated, 3.5 billions of inferred. That's great. Then you peel off the first layer and say, okay, well, on a co-product basis, this is actually a pretty low grade project, right? Which is fair. But you've got 4 products that inform the revenue per dollar rock. You've got copper, you've got gold, you've got moly, and you've got rhenium. Those are the 4 main products. So this is a margin play. This is a how much value is in this rock. And so then when you go into the third layer of the onion, you'll see that explicitly in our resource table. You'll see the NSR, net smelter return value per ton rock, in our resource table, because it shows you that at a cost or a cutoff of 1150, which is again a number that you're going to be seeing in the PEA, right? That is expansive margin. And so anything above $35 is going to have a massive impact on the project. That's why we're focusing our exploration efforts in this northern region where it's at surface, it's higher margin rock.
Sam, appreciate your time today. Thank you.
Thank you very much, Matthew. It's always wonderful to talk to you.